Based on the historical data and forecast, Bitcoin has shown volatility, with a recent trading range between $76,300 and $85,200. The RSI indicator fluctuates around the 40 to 50 range, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, indicating increased volatility and potential price swings. Considering the support price of $81,100 and the forecast for the next week, a cautious, range-bound strategy is recommended. We will implement a strategy combining RSI and Bollinger Bands, focusing on short-term price movements within the established range. The strategy involves entering long positions when the price touches the lower Bollinger Band and the RSI is below 40. For example, when the price reaches $82,200 on April 22, 2025, and the RSI is 38.6, enter a long position at $82,200. Set a stop-loss order at $81,100, just below the support price and the lower Bollinger Band. The initial target price will be the upper Bollinger Band, around $83,100. If the price reaches the upper Bollinger Band, take partial profits. If the price continues to rise, adjust the target price to the next resistance level. Conversely, if the price breaks below the lower Bollinger Band and the RSI falls below 30, consider entering short positions with similar stop-loss and target strategies. This approach balances potential gains with risk management, capitalizing on short-term volatility within a defined range. Based on the historical data and forecast, Ethereum has shown a downtrend recently, with prices fluctuating between the support level of $1,520 and the resistance level of $1,860. The RSI consistently indicates oversold conditions, hovering around the 30 to 40 range, suggesting potential for a bounce. However, the forecast for the next week predicts a continued downward trajectory, with prices expected to fall to $1,490. Considering the Bollinger Bands, the price has been consistently trading near the lower band, reinforcing the bearish sentiment. Therefore, I recommend a contrarian strategy focusing on short-term gains. My strategy involves a long position at $1,570, anticipating a short-term bounce due to the oversold RSI. The stop-loss should be placed at $1,530, just below the support level of $1,520, to limit potential losses. The target price will be $1,640, aligning with a previous resistance level and a reasonable profit target given the current bearish trend. This strategy leverages the oversold RSI and the potential for a short-term reversal, while the stop-loss protects against further downside risk. This approach offers a high-risk, high-reward opportunity with a clear entry, exit, and risk management plan. Based on the historical data and forecast, XRP shows a mixed trend with periods of both upward and downward movement. The RSI values fluctuate between 31.4 and 50.6, indicating both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands to capitalize on potential price movements. We will initiate a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. The entry price will be $1.8. To mitigate risk, the stop-loss will be set at $1.75. The initial target price will be $2.1, based on the resistance level. To refine this strategy, we'll incorporate the forecast data. The forecast suggests a price range between $2.07 and $2.11. If the price reaches $2.1, we will move the stop-loss to break even at $1.8 to secure profits. If the price continues to rise, we can set a second target price at $2.2. This combined strategy aims to capture short-term gains while managing risk effectively. The portfolio will consist of 60% long position based on the combined RSI and Bollinger Band strategy, and 40% in cash to allow for flexibility and potential opportunities to enter the market at better prices if the market conditions change. Based on the historical data and forecast, BNB demonstrates a volatile trend with periods of consolidation and upward movement. The RSI consistently remains below 50, indicating a generally oversold condition, with a recent uptick suggesting potential upward momentum. Considering the support price of $553 and the forecast prices hovering around $570 to $580, a strategic approach is to capitalize on potential rebounds. I recommend a long position entry at $567, placing a stop-loss order at $560 to mitigate potential losses. The initial target price is set at $580, aiming to capture a short-term gain. To refine the strategy, we incorporate the Bollinger Bands. The price fluctuating around the lower band suggests a potential buying opportunity. If the price breaks below the lower band of $568, it signals a stronger bearish trend, and the position should be exited. Conversely, if the price approaches the upper band of $649, it indicates overbought conditions, prompting a partial profit-taking strategy. Combining the RSI and Bollinger Bands, I suggest adjusting the target price to $590 if the RSI moves above 50, ensuring a balanced risk-reward profile. This portfolio prioritizes capitalizing on short-term rebounds while incorporating risk mitigation techniques. Based on the historical data and forecast, Solana shows a recent upward trend with volatility. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, the recent dip to $105 on April 9, 2025, and the subsequent recovery suggest potential buying opportunities. Considering the forecast prices hovering around $120 to $123, and the Bollinger Bands indicating a range between $104 and $146, a strategy focused on capitalizing on temporary dips while respecting the support level of $125 is recommended. My recommended strategy is a combined RSI and Bollinger Bands approach. Entry price will be $120, coinciding with the initial forecast price and a potential bounce from the lower Bollinger Band. A stop loss will be set at $117, just below the recent low and outside the lower Bollinger Band, to limit potential losses. The target price will be $126, aligning with the upper Bollinger Band and providing a reasonable profit margin. This strategy aims to capture short-term gains from the expected upward movement while mitigating risk through strategic stop-loss placement. The support price of $125 will act as a secondary confirmation point, reinforcing the buy signal. Based on the historical data and forecast, TRON shows a slight upward trend. The price has been fluctuating within the range of $0.23 to $0.255, with support at $0.246 and resistance at $0.255. The RSI has been oscillating above 50, indicating neither strong overbought nor oversold conditions, but recently trending upwards. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast indicates a potential breakout above the upper band. Given the upward trend and the forecast, I recommend a long position strategy. Specifically, I suggest entering a long position at $0.248. The stop loss should be placed just below the support level at $0.245 to mitigate potential downside risk. The initial target price should be set at the resistance level of $0.255, aiming for a quick profit. If the price breaks above $0.255, a trailing stop loss can be implemented to capture further gains, potentially targeting $0.254. This strategy combines trend analysis, support and resistance levels, and Bollinger Band signals for a balanced approach to maximize returns while managing risk. Based on the historical data and forecast, Dogecoin shows a fluctuating trend with support at $0.142 and resistance at $0.163. The RSI values have been oscillating around the midpoint, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been trading within the bands, suggesting moderate volatility. Considering the forecast for the next week, the price is expected to slightly decrease, hovering around $0.155 to $0.145. I recommend a cautious strategy focusing on short-term movements. My proposed strategy combines RSI and Bollinger Band signals with support and resistance levels. First, I will initiate a long position when the RSI dips below 30, indicating an oversold condition. Based on the recent data, the RSI reached 32.8 on April 13, 2025. Therefore, I will enter a long position at $0.142. To manage risk, I will set a stop-loss order at $0.138, just below the support level. My target price will be $0.163, aligning with the resistance level. This strategy aims to capitalize on potential bounces from the oversold territory and a support level. If the price breaks through the resistance, I will consider taking partial profits and adjusting the target price accordingly. This is a moderate risk, moderate reward strategy suitable for the current market conditions. Based on the historical data and forecast, Cardano shows a downtrend with increased volatility. The RSI consistently fluctuates around the midpoint, indicating indecision, but recently approached the oversold level, suggesting a potential rebound. The Bollinger Bands have been widening, confirming the increased volatility. Considering the forecast for the next week predicts a continued decline, a conservative strategy focusing on short-term gains is advisable. I propose a strategy that leverages the RSI and Bollinger Bands for opportunistic trades. My strategy involves a combination of RSI and Bollinger Bands. First, I will wait for the price to reach the lower Bollinger Band, specifically around $0.586. Then, I will enter a long position at $0.586, placing a stop-loss order at $0.559, just below the support level. The initial target price will be $0.631, aligning with the recent resistance level. If the price breaks through this resistance and the RSI moves above 50, I will adjust the target price to $0.659. This approach balances risk and reward, capitalizing on potential short-term rebounds while protecting against further downside. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Avalanche shows a volatile trend with periods of consolidation and upward movement. The price has bounced off the support level of $17.5 consistently, and the forecast suggests continued price action around $19.0 to $19.3. Considering the RSI readings, we'll implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be based on the RSI, entering long positions when the RSI dips below 37.0, indicating an oversold condition. For instance, when the RSI is at $36.4 on April 14, 2025, we will enter a long position at $18.4. We will set a stop-loss order at $17.5, just below the support level, to protect against a potential downside breakout. The initial target price will be $20.5, aligning with a previous resistance level and a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it confirms the oversold condition and strengthens our buy signal. We will also use the resistance level of $19.8 as a secondary target. If the price approaches the upper Bollinger Band, indicating an overbought condition, we will consider taking profits or tightening our stop-loss. For example, if the RSI rises above $55.7 and the price reaches $19.3, we will adjust our strategy to secure profits. The portfolio will be weighted 60% towards the RSI strategy, 30% towards the Bollinger Bands, and 10% towards support and resistance levels, aiming for high returns while managing risk effectively. The forecast data for April 16 to April 22, 2025, suggests a stable price range, providing a favorable environment for executing this combined strategy. Based on the historical data and forecast, Chainlink exhibits a downtrend with a fluctuating RSI and contracting Bollinger Bands, suggesting decreasing volatility. The RSI consistently dips below 40, indicating a generally oversold condition. The forecast predicts a continued decline to $11.4. Therefore, I recommend a short selling strategy with an entry price of $12.3, a stop-loss price of $15, and a target price of $11. This strategy capitalizes on the predicted downward movement while limiting potential losses if the price unexpectedly rises. To refine the strategy, we can incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential short selling opportunity. Considering the forecast, if the price reaches $12.3 on April 16, 2025, initiate a short position. Set a stop loss at $15, just above the upper Bollinger Band, to protect against a sudden price surge. Aim for a target price of $11, aligning with the predicted downtrend and providing a reasonable profit margin. This combined approach leverages both RSI and Bollinger Bands for a more robust and potentially higher return investment. Based on the historical data and forecast, AMP shows a slight downward trend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with values frequently dipping below the oversold level of 20. The Bollinger Bands suggest that the price is nearing the lower band, indicating a potential bounce. Considering the support price of $0.00322, I recommend a long position with a conservative approach. Enter a long position at $0.00334, placing a stop-loss order at $0.00322 to mitigate potential losses if the price breaks through the support level. Set a target price at $0.00359, which aligns with the recent resistance level and offers a reasonable profit margin. To refine this strategy, I will incorporate the Bollinger Bands. If the price touches the lower Bollinger Band, which is around $0.00328, it signals a potential rebound. In this scenario, enter a long position at $0.00328, with a stop-loss order at $0.00317 and a target price at $0.00353. This approach leverages the Bollinger Bands to identify potential entry points during periods of low volatility. Combining the RSI and Bollinger Band signals creates a robust strategy that considers both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Tezos exhibits a clear downtrend. The price has been consistently declining from April 2, 2025, to April 15, 2025, and the forecast for the subsequent week projects further decline. The RSI consistently remains below 50, indicating a bearish sentiment, with periods of oversold conditions below 30. The Bollinger Bands also show a narrowing range, suggesting increased volatility and a potential for a breakdown. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.494, placing a stop-loss order at $0.53 to limit potential losses if the price unexpectedly reverses. Our target price will be $0.429, aiming to capitalize on the anticipated downward trend. To optimize returns, we'll integrate the RSI and Bollinger Bands into the strategy. When the RSI dips below 20, oversold, we will consider initiating a short position, but only if the price is also trading near the lower Bollinger Band. This confirms the downward momentum. For example, on April 15, 2025, the RSI was 28.2 and the price was $0.494, which is near the lower Bollinger Band of $0.472. We will enter a short position at $0.494, with a stop-loss at $0.53 and a target price of $0.429. This combined approach leverages both momentum and volatility indicators to enhance the probability of a successful trade. This strategy aims for a high return by capitalizing on the current bearish trend and utilizing technical indicators to refine entry and exit points. Based on the historical data and forecast, Kaia exhibits a slightly downward trend, with support at $0.0991 and resistance at $0.105. The RSI consistently hovers below 50, indicating a generally oversold condition, and the Bollinger Bands show a narrowing range, suggesting potential volatility. Given the forecast for the next week predicts a continued decline, I recommend a short selling strategy. We will enter a short position at $0.1, placing a stop-loss order at $0.105 to limit potential losses if the price unexpectedly rises. The target price for this trade will be $0.0958, aligning with the forecast and the lower Bollinger Band. To optimize the portfolio, I suggest a combined approach using all three indicators. Initially, we enter a short position at $0.1. If the RSI falls below 30, indicating a strong oversold condition, we will tighten our stop-loss to $0.103. If the price touches the lower Bollinger Band, we will consider taking partial profits at $0.0994. Finally, if the price reaches the target of $0.0958, we will exit the entire position. This blended strategy balances risk and reward, capitalizing on the predicted downward trend while incorporating RSI and Bollinger Band signals for enhanced precision. Based on the historical data and forecast, PAX Gold exhibits an upward trend. The RSI consistently fluctuates, with values above 50 indicating bullish momentum. The Bollinger Bands show that the price has been trending towards the upper band, suggesting a continued upward trajectory. Given these observations, I recommend a long position strategy. We will enter a long position at $3,280, anticipating further price appreciation. The stop loss will be set at $3,240 to mitigate potential losses if the price reverses. The initial target price is $3,340, aligning with the forecast for April 22, 2025. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 30, consider entering a long position at the lower Bollinger Band. Conversely, if the RSI exceeds 80, consider exiting the position and taking profits. We will adjust the target price to $3,370, reflecting the forecast for April 22, 2025. This combined strategy, leveraging both Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. The final portfolio will consist of a long position with an entry price of $3,280, a stop loss at $3,240, and a target price of $3,370. Based on the historical data and forecast, Kava shows a slight upward trend, fluctuating within the support of $0.398 and resistance of $0.43. The RSI indicator has been hovering between 35.8 and 49.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given these factors, I recommend a long position with an entry price of $0.423. A stop-loss order should be placed just below the support level at $0.398 to limit potential losses. The target price for this trade will be $0.427, aligning with the forecast price and the upper Bollinger Band. This strategy combines RSI and Bollinger Band signals for enhanced precision. If the price reaches $0.427, consider taking partial profits and moving the stop-loss to break even. This approach aims to capitalize on the current upward momentum while mitigating risk through strategic stop-loss placement and profit-taking. Based on the historical data and forecast, DeXe exhibits a downtrend, particularly evident in the recent forecast prices. The RSI consistently fluctuates, dipping below 30 on April 14, indicating an oversold condition. However, it quickly recovers, suggesting weakening bearish momentum. The Bollinger Bands show a contraction, indicating decreasing volatility, and the price has been trending towards the lower band. Considering these factors, I propose a contrarian strategy focusing on short-term gains. We will initiate a long position at $12.8, coinciding with the forecast price and the lower Bollinger Band. A stop loss will be set at $11.6, just below the forecast low, to limit potential losses. The target price will be $13.5, aligning with the initial forecast price and providing a reasonable profit margin. To enhance efficiency, I recommend a portfolio combining RSI, Bollinger Bands, and support/resistance levels. The primary strategy is the long position at $12.8 with a stop loss at $11.6 and a target price of $13.5. A secondary strategy will be implemented if the price bounces off the support level of $13.1. In this scenario, a short-term long position can be opened at $13.1 with a stop loss at $12.8 and a target price of $13.5. The combined strategy aims to capitalize on both potential rebounds from support and the anticipated upward movement in the forecast. This diversified approach will mitigate risk and maximize potential returns. Based on the historical data and forecast, NEO shows a volatile trend with periods of oversold and overbought conditions. The RSI consistently remains below 30 in the initial period, indicating a strong oversold condition. The forecast data suggests a downward trend, with prices potentially dropping to $4.35. Combining this with the Bollinger Bands, which show the price consistently below the moving average, I propose a long-term buying strategy with a focus on the oversold conditions. We will enter a long position at $4.35, placing a stop-loss order at $4.2 to limit potential losses. The initial target price will be $5.2, aiming to capture a significant upward rebound. To refine this strategy, I incorporate the support and resistance levels. The support level at $4.73 provides a secondary entry point if the price bounces back from the forecast dip. The resistance level at $5.59 will serve as a secondary target price, potentially yielding higher returns. We will adjust the RSI threshold to 25 as the entry point, and if the RSI rises above 75, we will consider taking profits or exiting the position. This combined strategy leverages the oversold condition, forecast data, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Raydium exhibits a generally upward trend with periods of volatility. The price has been fluctuating around the 1.80 level, recently breaking above the 2.00 mark. Considering the forecast for the next week, with prices ranging from $1.92 to $2.04, and the RSI consistently above 35, suggesting increasing buying pressure, I recommend a long position. We will enter a long position at $1.92 with a stop-loss placed just below the support level at $1.87 to mitigate potential losses. Our initial target price will be $2.04, aligning with the forecast high. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been oscillating within the bands, indicating periods of consolidation and potential breakouts. If the price breaks above the upper Bollinger Band, which has been around $2.09, we should consider raising the target price to $2.15. Conversely, if the price retraces to the middle band around $1.80, it could be a buying opportunity, but we'll stick to our initial strategy for now. This combined approach, using RSI and Bollinger Bands, aims to capitalize on the upward momentum while managing risk effectively. Based on the historical data and forecast, Starknet shows a downtrend, particularly evident in the recent forecast prices which predict a consistent decline. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential breakout. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the predicted downward momentum. My strategy involves entering a short position at $0.126. Given the support level at $0.121, I will set a stop loss at $0.128 to limit potential losses if the price unexpectedly rebounds. The forecast predicts a further decline, with a target price of $0.108 within the next week. This target price aligns with the lowest forecast value and allows for a substantial profit while managing risk effectively. This combined approach leverages technical indicators and price forecasts to maximize potential returns while minimizing downside exposure. Based on the historical data and forecast, Mantra has shown significant volatility, with a recent sharp decline followed by a forecast of continued downward pressure. The RSI values have fluctuated considerably, dipping into oversold territory, below 20, on several occasions, suggesting potential for short-term rebounds. However, the forecast prices consistently predict a downward trend, and the Bollinger Bands are narrowing, indicating increasing volatility and potential for a breakout. Considering these factors, a cautious yet opportunistic strategy is recommended. We will implement a strategy combining RSI and Bollinger Bands, focusing on short-term trades with tight stop losses to manage risk. The strategy involves entering long positions when the RSI falls below 20 and the price touches the lower Bollinger Band. For example, on April 15, 2025, the RSI was 17.7 and the price was $0.792, which is near the lower Bollinger Band of $1.43. We enter a long position at $0.792 with a stop loss at $0.597, support price, and a target price of $1.43, the lower Bollinger Band. Subsequently, as the forecast predicts further decline, we will implement short positions when the RSI exceeds 80 and the price touches the upper Bollinger Band. For instance, on April 10, 2025, the RSI was 56.3 and the price was $6.8, which is near the upper Bollinger Band of $6.88. We enter a short position at $6.8 with a stop loss at $5.72, resistance price, and a target price of $6.08, the center of the Bollinger Bands. This combined approach allows us to capitalize on both short-term bounces and the overall downward trend, while diligently managing risk with defined entry, stop loss, and target levels.